We see Polish economic miracle.
Poland is a big country. You can run a big business here in country, and Poland doesn't produce a global company. For example, CD Projekt, CCC, LPP, Reserve brand, for example, Dino, for example. Those companies grow from the small to the medium and also to the big companies in Poland. And the majority of this growth was captured in MBIG 40.
Our viewers are more interested in your new product, which is dividend fund.
We are happy about that. We must be honest with investors, of course. I will not say bullshit about that. We are not happy about that.
Hello, dear viewers. Welcome. Laskavo prosimo. We're going to talk today about Polish economy and in particular Polish ETFs. Either you live in Poland and want to invest into local market, or you live in Spain, Portugal, other European countries, but you want to participate in the Polish economic miracle via ETFs, this conversation will be useful for you. And I'm glad to introduce you Mateusz Mucha. He's the fund manager in Beta ETFs, Polish #1, and it seems the only company creates ETFs in Poland. Mateusz, welcome, and please tell us a little bit more about Beta.
Hello, thank you very much for invitation. Yes, I'm glad to be here, and I'm fund manager of Beta ETF, which is like a brand name of the project that is currently run by Agio Funds TFI and Beta TFI. This project is focusing on delivering ETFs on Warsaw Stock Exchange. Currently, we have 13 ETFs listed on Warsaw Stock Exchange, and we have like 1.4, almost 1.5 billion of Polish zlotych in our products. We started with our first ETF in 2019. It was the ETF on our blue chip stocks WIG20 total return. Then we added MBIG 40, some trading solutions like WIG20 and short. Of course, as ETFs is growing in terms of foreign investments, we also provide S&P 500 and NASDAQ 100, but in PLN hedge mode, which could be important for especially investors who wants to hedge this position in Polish zloty. This year we introduced also very interesting products, which is first ETF listed on Warsaw Stock Exchange for cryptocurrency, Bitcoin. And of course, our top pick for this year, Beta Dividenda Plus. This is the first ETF focusing on dividend companies listed on Warsaw Stock Exchange, which this ETF provides also the income redistribution per quarter. First distribution is coming in March 2026. So that's the currently offer of Beta. This year is also really impressive, almost $500 million of new flows into Beta ETFs products.
It's indeed impressive, and I'm seeing a lot of talks of you. It seems very successful launch of a dividend fund, which we're going to discuss later. But imagine somebody wants to invest in Polish stocks. If they go to US, they would take usually S&P 500, in SPY, WU. But there is also a fund called VTI, which covers mid caps and small caps. It seems Beta doesn't have that. So what in your view would be the best construction for somebody from abroad who wants to invest into all Polish stocks, not just the WIG20?
Not an easy question. Of course, if we are talking usually about foreign investors, they are looking for liquidity. Liquidity is the most important factor for big foreign investors. That's why they are focusing on the blue chip stocks, which are basically in WIG20 index. The big banks like PKO BP or oil company Orlen, for example. Those the biggest, also very often state-owned companies, which are the most liquid. But as we can see on the graphs for many years, the WIG20 total return index did not provide significant returns, like, for example, S&P 500. And based on that, there is some kind of really bad statement that Polish Warsaw Stock Exchange do not provide basically the miracle of Polish economy, what happened in the last 15 years. And to be honest, we have to deep a little bit more into the methodology of Polish indexes and Polish Stock Exchange to see where is the value, where is this growth, which happened basically in economy and also happened in stock market. And we have this second line and third line, which is MWIG40 total return. So this is the index captured 40 mid companies, basically, not the biggest one, but these mid companies. And also we have 80 companies, small companies listed in SWIG80 total return, which capture the 80 small companies. And when you check the returns of those indexes, the indexes are calculated since 2010, you can see that the average return is even better than S&P 500. For example, MWIG40 average return since 2010 is above 11%. SWIG80 is close to 9%, which also corresponds to S&P 500 returns. So this is a very important message that especially individual investors could consider, that if you want to capture Polish economic growth that also happens, and the estimation, the forecasts are also very promising, you should focusing on MWIG40 and SWIG80 companies. And the good question is, why is that? Why is basically that scenario happened? And why is that in terms of methodology, we believe it could also happen in the future? So very often there's some kind of false statement is that the majority of the scenario like that happens because in WIG20 you have state-owned companies, which are not very often focusing on delivering the growth of the stock, but focusing on some kind, of political, social economy issues, but not focusing on the growth of the business, But this is the false statement, to be honest, because if you analyze the best companies in WIG20, the top picks will be basically state-owned companies. But you have to understand what kind of the growth those companies have. Poland is a big country. You can run a big business here in country, and Poland doesn't produce a global companies, basically, like S&P 500s. We are speaking about US companies, but they are global companies, You can have Apple iPhone, you have Microsoft. Today we are speaking via Google Meeting, So this is the global products, basically sell all over the world. In Poland, you do not have those type of companies. So the growth of those WIG20 companies are really capped to the growth of the Polish economy. But you have a lot of beautiful history of small companies that build a growth via medium companies to big companies. And the example is, for example, CD Projekt, CCC, LPP, Reserve brand, for example, Dino, for example, the grocery shops. Those companies grow from the small to the medium and also to the big companies in Poland. And the majority of this growth was captured in MWIG40, So that's why basically if you check the returns since 2010, you see that MWIG40 total return has a growth like above 400%, and WIG20 is like 120%. This is the main difference, basically, that need to be understood, that the MWIG40 and SWIG80 has some kind of methodological advantage of capturing the growth of the Polish companies. That, of course, it's not that all Polish companies get some great success, but some of them will, basically, and make this engine in MWIG40 really visible.
It's actually positively shocked me. It's the first time I saw anything like that for developed economy. When I checked beta ETFs and the mid caps WIG40, it has like 2, even maybe 3 times more assets than WIG20. That was a big surprise for me, because usually if you look at S&P 500, it's totally opposite.
Exactly.
That's an interesting story. I do see that MWIG40 and 80 would be the better representation if somebody wants to participate more in this Polish economic growth. The other question I got actually from clients, we were talking indexing and having exposure to Poland. You have, I believe, competitor in iShares, but the beta lineup seems broader and cheaper. But I got that question from the client I have to address to you, and I know you answer it a lot. Why in S&P 500 they pay like 10 basis points, in beta ETFs they have to pay like 65 basis points or even 1%?
Yes, that's a usual question because we are speaking about advantages of ETS, and one of the most important advantages that they are cheap, yeah. And then you check the S&P 500 and you see 5 basic points, and then after you check some kind of other exposure, and for example, Beta Poland, yeah, it's 0.6, yeah, so much more expensive. The most important factor to consider is this is the business based on scale, and once again scale. This is the most important in fund industry. So in terms of S&P 500, we are talking about hundreds of trillions, basically, assets under management. Yeah. So the scale is so big that basically, if you are even taking some 5 pips, 3 pips, yeah, basis points, is basically big income for the provider. Yeah. But you need to compare product or segment by segment. Yeah, so you cannot compare Beta MWIG40, for example, to S&P 500 because those are different products. We are speaking about 500 the biggest companies in US market that are covered from many different places by many different providers, and you are speaking about some segment of Polish economy, basically Polish stock exchange that currently is covered by one provider, only Beta. And the good comparison is basically you should look for similar market, for example, and you also mentioned that MSCI, or exactly iShares, so BlackRock ETF brand, provide the ETF for Poland, MSCI Poland. Actually, they provide 2 ETFs. And when you are checking the total expense ratio, is even bigger, for example, than Beta at the WIG20, and we are much smaller than that. I just give you some kind of comparison. I believe this iShares has some kind of 1 billion Polish zloty assets under management, and Beta is 170. Currently, the total expense ratio on iShares is 0.74, on Beta is 0.62. If we will have assets like iShares, so our assets will be above 1 billion, our total expense ratio will be like 0.45, basically. So we are already one of the cheapest, or basically we are the cheapest solution on Polish indexes. And of course, we are much cheaper than active funds in TFI. But of course, I believe that this is, some kind of obligation to the investors that if we will have some kind of growing scale in the future, we will also reduce our management fee. But please remember that we run this project for many years, and currently, since this year, we have some kind of scale that we can develop better. Yeah. So it's also, needs some kind of patience and time to reduce the fees and to be more attractive for investors. And also the competition. Yeah. Currently, we have some kind of monopoly position. We are happy about that. We must be honest with investors, of course. I will not say bullshit about that. We are not happy about that. But basically, this is some kind of the law of the market. If there is some kind of monopoly who is making money, the competition will arise. Yeah, so it will be for sure beneficial for the market, beneficial for investors. But currently, I do not see a lot of competition coming. They are investigating the subject. But also in Poland, you had so dominated the distribution of active funds by the banks, there wasn't even a thought, basically, to create an ETF like that. Yeah, this idea came to our team from foreign investors that provide this idea, and basically we start developing in that. It didn't came from, the bank TFI, basically. Why? Because they're making a lot of money via bank distribution. Yeah, so that's the current status of the market.
Well, it's part of my job, as educator. Why would somebody pay 2% for the strategy that underperforms the index when the index costs, you said, 62 basis points?
Exactly.
And we explain that to people a lot. And, Beta ETF is growing. So definitely some people hear our message. And especially when we show calculation, the real cost of 2% per year is just tremendous on the 10.
On long term, of course, it's tremendous. And also you have this growing culture of independent investing, basically, that currently you can invest like professional fund manager for many years ago. Yeah, you can build a equity on US, you can build local equities, you can buy some foreign bonds, local bonds, so you can create your portfolio on own, and it's also not so time-consuming activity, basically. If you understand the basics and you are good with your strategy, in execution your strategy, you will be absolutely fine and much, much better than you will invest in active fund basically and pay a lot of commission.
Yeah, agree. And I'm glad, there are very independent advisors who are not selling those funds for commissions, but who have transparent fees and, they help to deliver message. And of course, talk about beta ETFs because you are simply the best in terms of exposures. All right, so we've talked about indexing. You do have indexes for US market, NASDAQ, as S&P 500. Yes. They hedged to zloty, and we run the investment up in Poland for Ukrainians. And I got the question, should I buy S&P 500 like the dollar version or the beta version with zloty hedge? And can you explain in which cases the zloty version would be more beneficial for investor? What's like its purpose in the portfolio?
So basically there are, I believe, 3 factors that you should consider in some kind of choose between hedge or non-hedge S&P 500. Let's take this index. First of all is your basically point of view. That's also very important because it's maybe not so academic, but if in Poland we have investors who put basically every asset into Polish zloty and he earn in Polish zloty and basically he wants to live in Poland and he wants to get a growth of S&P 500 but without risk of US PLN, basically it's a product for him. Yeah, he can get a growth of S&P 500 and do not take care about US PLN course, exchange rate. Basically, so that's the first. Of course, we have a lot of investors that want to diversify their wealth, that they think that it is good to have some kind of US dollar exposure. They even go to foreign brokerage houses to put money outside the Poland financial system for safety reasons. Basically, it's also pretty wise in those dangerous times, some kind of approach. So basically, this personal point of view and start thinking about do I prefer Polish or hedge or non-hedge is also very important. The second factor important is time horizon of investment. Basically, if you are speaking about really long-term investing, like in decades, it's basically better to non-hedge your position, because the cost of hedging, we are much more expensive solution than S&P 500 listed abroad, non-hedge products. It's also, you will consume the growth basically every year. So if you are basically wants to invest in long term, you will buy when exchange rate will be high, when exchange rate will be low, and you will make this basically average with high, low levels, and basically will be in some kind of middle, especially if you want to make a regular investments for long term. But if you want to invest, for example, in 1 year, 3 years, for example, and you see that the current exchange rate is really high compared to the history, you could also consider the hedge position. And this is basically last 2 years is a great example, or 3 years when the war started, basically. So the course was the exchange rate, Polish zloty was close to 5. Currently we have 3.6. So this is the 3 most important factors that every investor should consider. This is the time horizon of investment, personal thing, and also one more, the risk of the underlying assets. In terms of S&P 500, we are speaking about equity, which is volatile index. It can drop drastically one day, it can grow also drastically. So the risk of the exchange rate is not so big compared to the, for example, to the S&P 500 risk. But if you are considering investing in, for example, in fixed income in US dollars, this currency risk will weigh much more in the total risk of investment. So if you have some kind of possibility to hedge your position when you are investing in much low risker asset class in US currency or euro currency, it's better to hedge your position because this risk counts a lot in total risk. So that's the 3 factors every investor could consider. We provide those solutions for Poles who basically wants to hedge their position. We have some kind of interested, but it's much less, for example, than in non-hedge position, because as I mentioned, basically long-term horizon dominated in those investments, yeah, for S&P 500s. And we honestly say that in that light, basically, you should focus on non-hedge products. Also, I like really good approach from one investor that tell me that basically he invests in two solutions. And he has some kind of level when he see that investing in beta is better, and when the currency risk is low, like currently he invests in non-hedge position. It's also a good approach, and I really like that because I do not like this discussion 0 or 1. Yeah, I prefer something in the middle, and this is the beautiful way of investing in your brokerage account, that you can build every position according to your point of view, not only that or only that. There is also the middle ground that you can make this approach.
Yeah. Oh, I like the way you explain it. And, some people think that investment strategy is just to invest into S&P 500 and that's it. But in real life, we see it's a bit more complicated than that. You have international diversification, you have local exposure, you have different currencies, different fees. You can reinvest dividends in accumulating or distributing way, and it's it's more than that to just buy one fund.
Yeah, there are a lot of factors to consider, but also there is some kind of simple approach that it is pretty okay. Just buy this S&P 500 and you will be fine. If you are really not interested in the market, you're not willing to learn, basically, there is also simple approach. But if you start liking this subject or want to basically educate yourself, there is a lot of factors that you can consider. And this is the great thing, that you can build basically something that will suit you especially. Yeah.
Okay, so we talked about S&P 500 a bit, but I bet our viewers are more interested in your new product, which is dividend fund. It seems it's attracting flows. And I know a lot of people like dividends, they like this cash flow. That fund can actually sit in the EKX and all the dividends will be reinvested, but they still like that cash flow they have. It's just psychological. So maybe you can tell us more about the funds, and also particularly, can you comment if this 6% dividend rate is sustainable, or do you expect it to come lower in the future?
Yeah, thank you for this question. So yeah, we created this fund. It's listed since August. We decided to create this in cooperation with Warsaw Stock Exchange. Even CEO of Warsaw Stock Exchange take a part in the process of creating. So we started work in October 24, and we are listed in August 25. And this is the index tracking the WIG-DIV Plus index. Yeah, this is the benchmark for this ETF. This index basically are focusing on WIG 140 companies that basically paying dividends. Every year there is a check that the dividend must be higher than 2%, the rate of dividend yield. And also the history of dividend is important. So there is one factor to that the dividend rate is higher than 2%. And the second factor is the history of dividend, that the company is paying every year for 3 years or from 5 years. Yeah, there is some kind of, it could be a gap here in the 5-year history. In the 3-year history, every year must be fulfilled with the dividend. This product is basically focusing on those dividend companies, and it's created from WIG20 and WIG40 and SWIG80 indexes, and this a mix of those three basic indexes of Polish large cap, mid cap, and small cap. It's not like they are, constant in the time. Yeah, basically, currently you are seeing that there is a big weight of WIG20 index, 70%. But in the history, for example, when COVID appears, the WIG20 companies weight only 20% of this index. Why? Because this index is looking for a dividend. If the company stop paying the dividend, it will be out from the index and out from the ETF. So this mechanism, some kind of methodology of tracking the dividend and focusing only for companies that are paying dividends, gives some kind of security for investors that this index, this ETF, will always have something to pay. And even in the COVID year, where, for example, a lot of companies stopped paying the dividends, the return of the index, dividend return of the index was 3%. which is of course maybe not a big number, but we have to remember that rate of returns was close to zero because the National Bank of Poland decided to save Polish economy and they cut rates to almost to zero. So even with this index approach, you got 3% of dividend yield. So you can see that even in the stress mode, this methodology works basically and suits investors. Yeah, of course, the number of companies are variable. Currently, it's 38. It was in the history 69. It was 29 the COVID year. So this is the index, but very dynamic from our point of view, not so static, very dynamic. And the criteria must be met to be in this index. Yeah. So in terms of dividend yield, you mentioned currently we are close to 7% even on the dividend yield of the index. You have to reduce the cost of the fund. I will speak a little bit later about that. Is some kind of guarantee rate of return of dividend yield? Absolutely not, because you analyze the history, you have rate of dividends like 5%, 4%, this 3%, and 6%, and currently close to 7%. So it depends on two factors. First, of course, dividend yields from the companies, and second, of course, valuation. Yeah, because if you have some kind of cheap valuation, basically, the dividend yield could be really impressive. Yeah, if you have high valuation, then the dividend yield could be really low, basically. But then you should be happy because your price probably increase a lot during that time. Yeah, so it's of course nothing can be guaranteed, but some kind of methodology really suits and really works well even in the stress scenario like COVID. Yeah, so this index is looking for dividend. Yeah, the good example is that, for example, in the 10 years of the history of the index, you had almost about 140 companies in this index. Yeah, but only 5 of them was every year in this index. Yeah, it shows really strongly that it is really hard to find a company, listed company, that every year pay the dividends, that you will be absolutely sure that this company every year will pay dividend for me. As you can see, only 5 companies in 143 pay every year the dividend above 2%. Yeah, so that's
only for the dividend aristocrats in Poland.
Yeah.
Only 5, not enough for the fund.
Yeah, we are not so mature market after all, so we need to develop. I believe this number will be better in the future, but this is the show the risk of the dividend investor. Yeah, basically you need to be active investor if you want to basically be sure that the dividend will be paid. With this solution, you have some kind of approach that you can use in your portfolio, and again, not in 100%, but for example in 20%, and you will be sure that this ETF will pay the income 4 times per year. This is something unique very in Poland, because every company is usually paying 1 per year the dividend. This ETF will pay quarterly payment. Yeah, so that's the mechanism. And in terms of fees, this fund needs some kind of, like, how to say it in English, it's ready, it's listed, of course, but it's some kind of 100% of effectiveness will come in the time. What I mean, we made an IPO in August, so we missed a lot in terms of dividends. We are usually paid in June and July, so we need a little bit more time to catch whole the year of the dividend. Yeah, that's why the first income distribution that will happen in March will be a little bit small, basically, in the way of picking, because we catch only the dividends from August and September and October, November, December. Yeah, so not so big amount. Yeah, the proper big one, the income payment from the fund, will be after basically this third quarter 2026, which will be in December, the payment. Yeah, that's when the full year of the dividends coming to the funds will be distributed per quarter. So in some kind of optimal scenario, these funds should work like that. If you have a dividend yield, for example, 6.5%, there is some kind of cost of the fund that you need to deduct, and you divide this 6%, for example, by 4, and this is, let's say, the quarter payment that you should expect from this fund. The income will come to you. That's the mechanism. About the fees, currently there is some kind of promotion because of this, let's say, non-full effectiveness mode. There is no management fee for us until end of June. After end of June, there will be 0.5% in year, basically the cost of the management fee. The cost of the funds depends on the asset, how big the assets are. Currently, we have 60 million in this fund. If we will continue the growth of the assets until June, the total expense ratio with the management fee should be close to 0.7, yeah, something like that, yeah. So if the assets will be bigger, for sure, the total expense ratio will be lower. So that's the very, very interesting fund, first fund like this in Poland, and a lot of interest from many different places about this fund.
I'm sure our viewers are going to be interested too. And I remind everyone about likes. If you are interested in investing in Polish stocks, Mateusz has also a presentation. It's in Polish, we will translate it to English and Ukrainian. And if you want to see that presentation, please comment, write beta in comments, and we will send you the link in the language you prefer. And Mateusz, maybe last question. We see ETF industry is growing globally. We see the growth in Poland. We see Polish economic miracle, one of the best for sure in Europe. And there is a lot of talk about this OKI account, OKI, with its 100 zloty. Do you envision this is like extra boost to already growing market? What's your expectation about that?
We are very optimistic about the OKI project, that's for sure. This is the project that, it's focusing on Polish listed companies and Polish equities. That's the basically main reason to make some kind of booster of the Polish stock exchange, to give some kind of tax expansion, to invest more effectively in tax treatment. So we are very optimistic. Of course, currently there is a big discussion about details, about limits, about the products, some kind of way to manipulate those rules. So there is a big discussions. But I believe that we are close to the final version. If the final version will appear, I'm really happy that and looking forward that brokerage houses will start running OKI very soon, basically as soon as possible. And then basically you have the product on the shelf to invest in index, basically not in the single stocks. And you can be passive with basically beta ETF solutions. And as I mentioned, yes, we currently have some kind of monopoly position in that. So for sure, if the OKI will appear and the competitors will sleep as they are sleeping currently, for sure we'll feel some kind of, positive inflow, which is also beneficial for investors because the total expense ratio will go down because of the bigger assets. So we are finger crossed about the OKI program. We are monitoring closely and will for sure make some kind of campaign materials, marketing materials, or maybe even a new product for OKI if the final regulation will appear.
Well, sounds optimistic. And for our users, I'd like to remind that we already had review of OIPA program of EKX, so use that and pay legally less taxes.
Yes, you have a lot of possibilities to invest without taxes in Poland, and the limits are really impressive. If you combine a wife and husband together, it's really a lot of money basically every year to invest free of tax. Of course, you have to meet some kind of criteria, but even if you do not think about investing into your retirement, you can use this EKX as some kind of tax reduction, basically, or basically to pay taxes less later. Yeah, so it's a really, really effective. So it's good to know those programs and use it if it's possible for you.
Yeah. And Poland has this good thing that you can combine the limits. It's not like you have to choose. Because in some countries, like in the United States, you gotta choose is it ERA or Roth ERA, and here in Poland you can do both. So, and if you, like you said, if you are a married couple, then you multiply all the limits by 2, and it's
exactly
very interesting.
Exactly.
All right, dear viewers, please like this video, comment better if you want that presentation. We also have links in the description of this video to Beta website, and let us know what other topics interest for you about Polish stocks. Mateusz, thank you for your time today.
Thank you very much. Also, you can follow us on our social media. We also provide knowledge there, of course, in Polish, but we are always happy to translate something and answer a question in English, or even with your help in Ukraine. We are always looking for connection with investors, and this is all about WeCare.